Hello, chart watchers, and welcome to this Monday, October 22nd Market Watchers Live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at the market action today. We got the Dow Jones Industrial Average currently down 158 points, the S&P 500 down 11. The NASDAQ's been back and forth today, but it is currently higher by 28 points. The Russell 2000 also moving between positive and negative territory, currently up 3 points. The 10-year Treasury yield relatively flat, down about 1 basis point, 3.19%. Volatility index back on the rise a bit today. Technology performing well on a relative basis. That's good news. That's a group that did perform poorly last week, along with consumer discretionary, but these two are the best performing sectors so far today. Within the technology area, we do have computer hardware having a pretty good day, although it did take out last week's highs intraday and has since retreated back. That'll be worth watching into the close today. Financials, though, on the other side of the spectrum, underperforming, and you can see threatening breaking down and closing below last week's lows, which would not be good for the market. Energy also threatening a breakdown below the September lows after just literally 2 weeks ago threatening a breakout, and we got that false breakout. Energy been under pressure now for the past 2 weeks. And then finally, within the financials, AIG, which is a full-line insurer, struggling today, continuing weakness that it saw or that it has seen over the past 2 weeks. Stock was $54 just 2 weeks ago. Today, trading down below 46. All right, Erin, time for another week. I do have to say, though, this is the worst historical week of the year on the S&P 500 dating back to 1950. Same goes for the NASDAQ and Russell 2000. It's going to be interesting given the poor technical conditions as we start the week.
Oh, I know. And we've already been seeing a lot of problems here. Of course, last week. Doesn't look like we're doing much today either. So, yeah, it's a soft market. It's toppy. It looks like it's not going to bounce just yet. And if your seasonality is right, then yeah, we probably won't see it.
Yeah, and the seasonality isn't something I would necessarily be using as my primary indicator. But when you see the market as weak as it is, and then you go into this week knowing that historically it hasn't been great, it does kind of, I don't know, maybe send a little bit of a confirmation signal for me that I want to be really cautious as we go into this week. And I'll show you some interesting charts on the major indices when we look at the daily and the hourly charts, but I don't think things are looking very good. Of course, the market sometimes has a mind of its own, so maybe we'll rebound. But for now, things are looking kind of weak. What do we got going, though, this week?
Oh, I know. It's going to be an exciting week. Tomorrow, we have everything stock charts, and I believe Chip Anderson is going to join us for that segment. We have Roman Bogomazov at, let's see, Wednesday. Yes, he'll be here Wednesday. He's big on the Wyckoff method with Bruce Frazier. Dan Russo from Chaikin Analytics will be with us on Thursday. So it should be a great week as usual. Today, though, we're going to do our Monday setups to start off the show, and earnings spotlight will be going on today. So looking forward to hearing from John Hopkins, who's here. 10 and 10. First symbol is going to be Burlington Stores, BURL. And then we'll finish off the program with the DecisionPoint report. All right, let's get started. Technical news. What's going on out there?
All right, well, first, there were no economic news of significance out this morning, so the bond market was just kind of left to do its own thing, and apparently it's not doing much. So you can see the 10-year Treasury yield really kind of flat today. It is down 1 basis point, just below 3.19%. And we just continue to be mired in this short-term range between about 3.11% to the downside and about 3.25% to the upside. So we're literally sitting almost right in the middle of this. We'll see which way it goes. The higher rates seemed to spook the equity markets a bit. When we did break through 310, ran up to 325. But when we pulled back, it really hasn't seemed to give much relief to the equity market. So I don't know. We'll have to continue to monitor that. But again, for the short term, I'd watch that trading range on the TNX. There were a number of earnings reports out today, so we can go ahead and take a look at those. First, we can start off with Kimberly-Clark. You can see Kimberly-Clark did beat. In fact, of the stocks that I listed here, there are mostly beats, but you'll see that Hasbro was pretty weak. And then one stock that I didn't list here, Lennox, Also, actually, Lennox is on here. We've got a couple of misses here between Hasbro and Lennox. The others did come through with some positive results. But it's interesting when you look at some of the charts. And so let's take a look at some of those now. And I'll start off with Kimberly-Clark. Okay, Kimberly-Clark. I've got it up on the relative chart. So for those of you who are new to the show, here's Kimberly-Clark. Here is the non-durable household products index, which Kimberly-Clark is a part of. And then you've got Kimberly-Clark relative to that index, so relative to its peers. Then you've got Kimberly-Clark relative to the S&P 500. And then you've got that index of non-durable household products relative to the S&P. So that's the way I like to set up these relative charts to get a bigger picture of what's going on rather than just look at one stock price. Here you can see Kimberly-Clark did gap up with its earnings beat this morning, was up, I don't know, a couple bucks at the open, and then has fallen back down, was down as low as 104 and change. It is a couple dollars off of that low, and it is in the space that has been somewhat protected by the market over the past few weeks, that consumer staples area. But when you look at the group, the group has been performing pretty well. Unfortunately, Kimberly-Clark has not been one of the better performers, and given its performance today, it is down near a 52-week low relative to its peers. You've also got the stock that's been, for the most part, underperforming the S&P 500, and that's only increasing today. And then you've got the index itself, which until Friday, which was the day that Procter & Gamble came out with a really nice report and a big gap up until Friday, this is a group that was really languishing relative to the S&P 500. So there's not really anything great that I'm seeing here with Kimberly-Clark, except that it is probably viewed more defensive. So it's probably not going to get hit as hard if the market does continue moving lower. A couple of other reports I wanted to mention. Halliburton came out. They did beat on their top line. Bottom line, I think they also beat. Pull this up quickly. Yeah, Halliburton beat on the top line $6.17 billion versus $6.10 billion. And then they also beat on the bottom line 50 cents versus 49 cents. But you can see from today's action, it's down 3%. Doesn't seem to matter. Market's going lower. Energy's been going lower. And as a result, the market not overly impressed by that slight earnings and revenue beat. And Halliburton actually trying to put in a double bottom back at that earlier September low. Hasbro, not a good report. 3 months ago, great report, beat on top and bottom line. This time they missed on top and bottom line, and they missed by a pretty wide margin. Revenues, they were expected to produce $1.71 billion. They came in at $1.57 billion, so about an 8% shortfall. And then earnings came in more than 10% lower than expected, only $1.93 versus $2.24. So you can see the huge gap down, but the reversal back to the upside. And this is one thing that's kind of unique, I guess, about the stock market, is that a lot of times when the market gaps in one direction or the other, you see a reaction rally back in the other direction. And the big reason why is you've got market makers that are providing liquidity. So they're on the other side of the trade. So when Hasbro gaps down and everybody wants to sell at the open, market makers are providing that liquidity, being on the long side. And in the short term, market makers make money. So I'm not shocked on this gap down that we're seeing a rally. Again, we saw the same thing with Kimberly-Clark gapping up and then moving lower in the opposite direction. Check this one out. IQV, they came out, they gapped up, got to 130. They closed around 127 on Friday. They opened above 130 today, went as high as 135 intraday. Stock now down at 125. Big reversal on IQV. And this is a company that beat top line, beat bottom line. They were both fairly close. IQV on the bottom line did beat 142 versus 139. Barely beat on the revenues. Got a good start, but again, in this market, can't trust anything. And IQV coming back down. Let's take a look at Polaris, PII. PII gapped up, continued, actually went down earlier today, now has reversed back to the upside. This was a pretty good report. They did beat on the bottom line by a pretty wide margin, $1.86 versus $1.57. But top line just barely a beat, $1.65 billion versus $1.64. And we got up to that 20-day moving average. We've been in this downtrend for a while. You can see that this group, the recreational products, has been under pressure, taking the stock down. And relative to its peers, it's actually been one of the worst performers within the group. So you got to wonder, when a stock beats on the top line, beats on the bottom line, but has been such a poor performer, is in such a poor area of the market, will we get enough buying to see it get through that 20-day moving average? That remains to be seen. All right, let's take a look at a few other things going on in the market today. First, let me pull up these daily charts on the major indices. So you got the Dow Jones Industrial Average, big volume. We break below the 20, we break below the 50, and now the 20-day is below the 50-day. Not a good configuration here in the near term. As we look through all of these indices, you're going to see the same thing. Here's the S&P 500. Then you've got the NASDAQ, all breaking down, all notice strong volume. And then the Russell 2000 small caps, biggest loser of all, dropping significantly the first couple weeks of October. Rallied a bit last week, and then by the end of the week, we'd given it all up again. We're back down near the lows here on the small caps. Let's take a look at the hourly charts. This is where I think the market's got some issues. Here, after the bounce, we did move back down, as I said, on the Russell 2000, got close to those prior lows. But you can see that once we got the PPO back above the center line barely and turned back lower, we are now back in a downtrend here on the Russell 2000. So watch that 20-hour EMA. We failed on Friday's close when we got up there, turned back down, sold off hard the rest of the day. Today we got off to a little bit of a good start, but still not above that 20-hour, and we have pulled back from those earlier highs. Taking a look at the NASDAQ. Had a really strong move earlier this morning, but check that out. Here's the 20-hour moving average. We got above very briefly early on Friday and then right back down. Seems like we're following that same path, and it looks like we are in a downtrend now over the past 3 to 4 trading sessions. The S&P 500, similarly, got above that 20-hour EMA, and I remember talking about this last week. If you truly are bottoming, we should have seen more strength. We should have held that 20-day moving average. Instead, we went back down below it, came up just slightly above it on Friday like we did with the NASDAQ, and now right back down below. Got to be careful here. Also, the Dow Jones looking very similar, doing the same thing, holding that rising 20-day, double top, failure, break down below that, move back up, test the 20, and start to roll over again. Seems like this overall downtrend remains in play with these charts. And the thing that makes it most scary is simply that the volatility index is elevated. So as long as the volatility index is hanging near 20, I'm going to be very nervous about the possibility of an impulsive move to the downside, something to watch. A couple of key industry groups that have been so strong of late, well, not of late, maybe up until the last week or two, medical equipment in the healthcare group. This has been one of the leaders. You can see the breakdown below the moving averages, the bounce to test the 20-day, and now right back down. A breakdown below the low from 2 weeks ago would not be good news. Software, key component of technology, same thing. Early October, we break down. Where did we fail in the rally? 20-day EMA starting to roll back over again. The financial administration stocks in the financial sector, same thing. One of the leaders broken down. They go up, test the 20-day, so far rolling over. These are not the kind of things that we want to see. Transports, very, very weak. Huge move down in October. Rally couldn't even get back to the 20-day, and here we are testing the lows from 2 weeks ago. A couple of key areas within the transports. You've got railroads, which continue to trend lower after being a major leader of the market for many, many months. We have been breaking down, or we did break down, and you can see not even rallying to the 20-day yet. Another key area within the transports, the truckers. Check this out. Since early September, we have been downtrending, lost the low, the support that we had from back in late June and throughout July. Still looking weak, PPO declining, things not looking very good here. A couple upgrades and downgrades for you. I know Erin's got those, so what are they looking like, Erin?
All right, let's get it started. Some interesting ones, actually. Let's start with our upgrades. Chipotle was upgraded from sector perform to an outperform by RBC Capital. I was looking at this chart. I like that PMO. You can see it's starting to curve right back up. We've held 200-day EMA support. You have a pretty healthy scooter going on right here. So I thought this one looks, pretty good on the upgrade. As long as it can hold this support at the 200, I'd watch for overhead resistance probably at that 20-day EMA. It's posed difficult resistance the last two tops, so we'll have to see if it can bust on through there. Next upgrade I have is Intel. Nomura upgraded Intel from a neutral to a buy. You know, when I look at this one, you've got, it almost gives me the feel of, you know, almost like a head and shoulders sort of feel to it. Overall, I would just say we're looking at a big topping formation on this daily chart. We have a PMO sell signal that came in below the zero line. PMO has been under the zero line for quite some time. I was a little surprised to see this on the upgrade list, given how ugly I thought the chart looked. I think we still need to come down and test these lows back down here at about $42. So I think we could still see some downside even on this upgrade. Lennar was also upgraded today by Deutsche Bank from a neutral to a buy. And you can see it continues to set new lows for the year. So I'm going to go ahead and take a peek here at the weekly chart. All right. And again, I'm really surprised to see some of these upgrades coming in just based on these charts. Look at the weekly chart. We've got a PMO that is just in free fall on that weekly chart, and you really at least need to see it like slowing down or something, but I'm just not seeing that. You can see that there's support way down here at 37.50. That's really where I'd start looking if this ends up being broken at $40. You know, in the upgrade, we're still down over 2%. I just don't see it. I think that upgrade is a little suspect to me as well. Let's see, a couple of other big name upgrades. AT&T was upgraded, United Rentals, Meritage Homes was also upgraded today. So let's look at a couple downgrades. Bristol Myers Squibb was downgraded today by Citigroup from a buy to a neutral. And boy, investors did not like that, but they were already unhappy with Bristol Myers. As you can see, huge drop on that correction we saw and continuing down, big gap down on this downgrade as well. Well past the 200-day EMA. You can see really negative setup here, PMO sell signal, and PMO's back down in that negative territory. And it could certainly travel down further. So just because it looks like we're near this support level here in that May-June timeframe at about $49, I don't think that it's necessarily a great support zone. It may appear to be, but looking at the negative characteristics of that chart, I would have some issues with it. I'm just going to pull up the monthly just very quickly here. And yes, see that you can see this level here at that $45 range. Seems like a little bit better setup for some support at this point. All right, next downgrade we have Pulte Group. Deutsche Bank downgraded Pulte from a buy to a hold. Here's another one where we have to go to a weekly chart just to find possible support here. And on the downgrade, it isn't likely to look much better later. And let's see where we're looking at some support levels. $22 really was the spot. That was a sweet spot. That's where it really needed to turn itself back around. And instead, it has dropped below that $22 level. It is continuing to fall lower. The next level of possible support, I mean, I suspect at $17, you could look at these lows back here. But let's face it, I mean, the next area of really strong support, I would say, is down here at the $14 level. I mean, again, you could say $16 if you want to go along these lows, but not liking that either. Wingstop, our final downgrade by Wedbush from a buy to a neutral. Now, when I look at Wingstop, it has a little bit more potential here as a possible bottom feeding opportunity, just because you can see support is not that far away. And also, you know, on this downgrade, we may still see some deterioration here back down to that $55 level. I mean, it could be very painful if we can't hold that $62, $50, $63 level. We can't hold that. I'd be looking for a move down to 55, but at that point, I think it could be a nice pickup. So something to consider for the future, but I think it still has a lot more downside to go. A couple of other big name downgrades, Barrick Gold, Rand Gold, both of those downgraded. eBay, Toll Brothers, and Union Pacific were all other big name downgrades that I just didn't have time to cover. So that's all I have for our upgrades and downgrades. It's time to get into the Monday setups and see how we did last week. Any idea how we're doing, how you're doing there?
It was a crazy volatile week. It was, if we could have done this back on Wednesday, it would have been a great week. But unfortunately, we got to hold them for a week, and AMD got crushed on Friday. I think both were down, but
yeah,
it is what it is. If you got to hold them for a week, yeah, I guess you got to take the pain.
Yeah. Well, let me go ahead and let's look at the actual charts here. All right. So AMD, we'll look at yours first, because then mine won't look as bad. All right.
Yeah, it did go up about, I think it was up maybe 8% by Wednesday morning from where it went out last Monday. So it actually did make a really nice move, but came right back down like the semis, like so many stocks in the market. They got a little bit of a bounce beginning part of last week and then sold off hard, especially many of the aggressive areas of the market, the risk on areas of the market. So yeah, AMD was down quite a bit. It came back up today, and it is up about 5% today. So I don't know where it is from where it's been so volatile, but I'm guessing it's probably down about 4 or 5% from last Monday.
Yep. Yep. It's still, I mean, look at that scooter. It's still at 99.9 on that scooter. So more of an intermediate term look, but.
Well, keep in mind too, that scooter is based on the distance between, there's a lot of different factors that go into it, but because AMD went up so fast, it's still hanging way above some of its key moving averages, and you can see that spread between the moving averages still pretty wide. So if it keeps struggling, that scooter will come down, but it's really ranked against other large cap stocks, and there aren't too many large cap stocks that have that kind of moving average configuration. That's why you're seeing that scooter still remain up at 99. Doesn't mean that stock's not getting hit hard. It's down probably 30% in the last month. Pretty big.
Yeah, absolutely. And if this $24 level doesn't hold, I'd certainly be looking at 20.
Yep.
All right. Mine was Shoe Carnival. And let's see, I got it at 39.42. So it's down 41 cents from when I got it. It didn't do much. I mean, it was pretty much sideways. Here's what had attracted me to it was that PMO that was starting to head back up. And then it turned back down below the signal line. So that was already kind of, I knew I was in trouble there as far as the pick goes. If I had made the pick or made the purchase, yeah, that would have probably scared me out at that point. But it's time for the next week. What do we have to look at for this week? Let's see. Let me get us to my Monday setups here. So yeah, I actually should have looked at this one right there. Would have given us a better look why I picked it where it was. So, okay. So I'm going to start with the ones I didn't pick, but I picked as far as a possible, Monday setup, obviously. Most of these have really nice PMO configurations. Now, I ran my technical scan for the PMO, my regular, just general PMO scan, and I came up with let's look, I have the results right in my scan right in here. So I had about 25 come up, 20 come up to look at. I thought it was interesting the sectors that came up. I had a lot of communication services, some discretionary started to poke in here. But I ended up kind of concentrating more on like the utilities, just some of the better looks that I saw. So let's start here. Yes, advanced disposal systems. So this one I picked, you've got the nice PMO rising. I have what I thought looks a little bit like a flag, not like completely, but it is holding that support level at 2650 that we saw here. You could make a case for a double bottom possibly. I would be looking for a move to test that $28 level. I would want it to hold the 20-day EMA. But I thought this one looked interesting. Ciena Corporation, CIEN. I picked this one as well as a possible, one to look at. We have the PMO again looking very nice. Hasn't had the crossover buy yet, but if we can get a little bit of a move to the upside to start catching on here, it certainly should give us that buy signal. Strong scooter. I think upside potential on this one, I'd be looking at about 32.50 to test the previous top we had back in here in August. But I thought that one was looking pretty good. KT Corp. This was another PMO buy signal on the way. This is a little bit lower volume stock, so just be aware of that. I thought the PMO setup looked good, and you can see rising bottoms on the PMO, and that's always a good thing to see with rising bottoms on price. PMO, or excuse me, the scooter just got up into the hot zone. You can see a gentle rise coming in here on the OBV. The only issue, the reason I didn't pick it is because we really do need to get above this $14.75, $15 level for me to be really comfortable with the pick. But I think it still has merit. Zebra Technologies was the other one. And as you can see, PMO just getting ready to have a buy signal. It is now in positive territory, of course, just barely, but it is in positive territory. Strong scooter. We had some pretty interesting volume going on here on the rally. It did start to peter off here, but now we are starting to see some consolidation. It is holding above the 50-day EMA, so I'd use that as my stop level if I were considering getting into this in a short-term time frame here. But I think upside potential is still really good, up to that 180 range. But here is my pick, and it is a utility, and I'm happy about that. This one is also very low volume, so just be aware of that. I don't know how closely you guys follow our Monday setups, but anyway, I want you to be aware of that if you were to take a shot on this one. But the 20-day EMA and 50-day EMA are getting ready to see that upside crossover. We sort of had a fake out here. It came in and gave us that neutral signal when the 20 crossed below that 50, but it's coming back alive. I think upside potential is really great here to 1060 on a low price stock. I would probably set my stop level around 990 if I were going into this more intermediate term. Although, like I said, with a low volume stock like this, I'm not necessarily going to be it's not necessarily going to be my first pick for an intermediate term investment. I prefer something a little bit more stable, but for a real short term investment, I think that's a pretty nice little potential here to come up to that 1060. And honestly, it could even move higher than that. But I think being in the utility sector, I would like to see it, I would like to see it do well. I still am not feeling that great about the market. And so utilities being a defensive sector, that's where I'm going to make my Monday setup. What about you, Tom? What you got?
All right. I am going to flip the tables on this market. I'm going to go short.
Oh, good idea.
I just don't like the market. And of course, I was going long for several weeks there and couldn't hit it on anything on Monday setups or on my trades either. So maybe by going short, I can put a bottom in on the market here.
There you go.
Reverse psychology. I'm actually looking, I do not have a position here. I don't short unless I'm comfortable. I'm in a bear market. So that's the reason why personally I'm just sitting in cash. But I do like stocks that have been downtrending, coming up and testing that declining 20-day moving average. So I think that this is a stock where you can keep a pretty tight stop. This HPE, Hewlett-Packard Enterprise. It's in the technology area, which has kind of fallen out of favor here in October. But we do have a nice little rally here back to this 20-day. We were very oversold. Now we've got the RSI back closer to 50. So I would short it at 1570. If you wanted to keep a really tight stop, maybe up around this, well, you could use any close above the 20-day. That would keep it very tight. Or maybe up around the breakdown level here at around 1615. That would still be about 3% to the upside, close above that level. But to the downside, I would be looking for a retest back down here, potentially 1450 to 1460, maybe even a little bit lower to test that July low. But I don't know, these stocks that are bouncing in this market that I think look pretty, I think the market overall looks weak. That would be something that I would be considering. Now, if I follow my so that's my pick for this week. So shorting HPE at 1570. Now, if I was just following my regular system and looking for some of my strong earnings stocks from a long perspective, then I would go through and take a look at some of these stocks. MYGN, Myriad Genetics. It's a biotech stock. I think just kind of sideways consolidating, had a huge move up back in August, also a big gap up with earnings. I think that was earnings back in July. Anyhow, since that move to the upside, you can see that the support has been coming in between about 41 and 42. And the stock is down almost 3% today. It is back into the 42s, recent high near 50. So I like the reward to risk. I just simply don't like the market. So I'm not buying the stock. I'm not buying any of these stocks at this point, but I do think it's got pretty good support down near that 42, maybe even 41 area if it continues to weaken. TTD, this is Trade Desk. I believe this is a software company, but we can take a look at the relative chart. Yes, it is part of software, which has been hit hard. This is held up. Well, I mean, they're all getting hit hard, but this one, considering the huge moves that this stock has made over the past year or so, I think it's held up pretty well so far, holding the top of gap support. So that 116, 117 area, I think, is really big. Recent high all the way back up at 160. So if you play that trading range, then clearly your reward to risk is very solid. Again, I'm not comfortable with the market. And here you can see a perfect example of how a stock gets beaten down, hits support, bounces, but can't get through its 20-day moving average and starts to roll back over again. But still, that support level, I think, is really big, down about the 116, 117 area. SEAS, which I think is SeaWorld. Yeah, SeaWorld Entertainment. Another one that has just made a huge move to the upside. The stock just 6 months ago was down around 15. It more than doubled and has been consolidating on fairly light volume here in October. You can see the weakness has come on relatively light volume. The recent low at about 28 and a quarter, I'd watch closely. We're at 28.85 now, but your recent highs up over 32 would be my target. So again, you can manage the risk here. And one change that I'm making in my trading strategy now, and I normally don't like intraday stops, but when you have a volatility index where it is, I think you have to have intraday stops in play. If you wait for closes, you can see a lot of impulsive selling between a short-term breakdown intraday and by the time you get to a close. So you do want to be careful there. TJX Companies, a retailer, I think continuing to hold up pretty well. Got up to about 112, 113 to start October. We hit as low as 107 last week. We're sitting at 109, but considering what the market's been through, I think TJX is setting up pretty well, continuing to perform very well on a relative basis. Watch the recent lows down around 107, 107 and a half as your support. First initial resistance would be around 113. HELE, this is a company, Helen of Troy, that's come out with great earnings the last 2 quarters. We saw it here with the gap up in July, and then just recently we gapped up again a couple of weeks ago. But like the overall market, I think it's just feeling the pressure. I'm watching the 20-day moving average. It's a stock that I might grow interested in if we get back through the 20-day. It's testing it. My guess is we roll over and head back to 117.50, which would be the other possibility for entry. And the last one I have is HEI. This is in the aerospace group. Big gap up, very nice volume back in August. But again, after printing that double top, the market being weak, we have seen October be very unkind to many stocks, including HEI. We pulled all the way back, nearly got to gap support, and once again, failed at the 20-day moving average, starting to roll over. But this is one that I think looks interesting the closer you get down to gap support around 81. So those are the stocks I have. Let's pull up our summary for both Erin and I. A little different this time, Erin. You got a utility stock, and I'm short, so that means the market's probably about to explode.
Oh, I know exactly. Yeah, but when I see those types of things come in on my scan, I always think that it's giving me a little bit of a hint, as to where the strength obviously and the weakness are, and seeing some strength in those defensive sectors on my scan, it's always raises an eyebrow.
Yep. Anytime defense is leading, usually not a good thing for the market. Doesn't necessarily mean we're in a bear market, but I think it is pointing to a correction at a minimum. And so it seems like we're struggling at this point to get back above those key moving averages. Until we do, I think it's best to be cautious in this market.
Yep, I agree.
Okay, let's move on. It is time for our earnings spotlight. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com. Better timing, better trades. All right, welcome aboard here, Mr. Hopkins. You might not want to show up, given what's been going on in the market, but
I'm here. I'm showing my face.
Hey, the Redskins beat the Cowboys, so I'm happy.
I'm happy Michigan won. Ohio State lost. Things could be worse. Although I was listening to you and Erin talk some. This is really interesting, Tom, because at earnings beats. By the way, Kid in a Candy Store coming up the next few weeks.
Mm-hmm.
Thousands of companies reporting earnings. I mean, I've seen this before, by the way. The market looks really nasty. You get a string of companies coming out with strong earnings and things turn around. I'm not predicting that at all. This time around, we have found the last, 2 to 3 weeks to be one of the most challenging times we've had at earnings beats. And it's really frustrating because you've got so many companies that are pounded and oversold. Nobody seems to care right now. They just keep getting more oversold. And I'm going to go over a couple of examples today and, show a lesson learned in, stock we got involved in. We're very good at discipline. And when you let up at all a little bit, when you change your philosophy midstream, it can really be painful. So, that's what I think a lot of traders are experiencing these days.
I would agree. I think, anytime we get the volatility index up and, into the 20s and so forth, I think for the most part, you can throw oversold, moving averages, technical support levels. For the most part, just throw them right out the window, because the market, when it does get into that really highly volatile environment, I just see a ton of impulsive selling. The selling just doesn't even make sense. I mean, you see the Dow Jones drop 500 points in 2 hours. I mean, obviously there's news to account for it. It's just nobody wants to buy. Everybody just lets these stocks drop. I call it market makers going on vacation.
Yeah.
Get the volatility index up at this level. So, yeah, I would agree with you. I think that changing and trying to make excuses for your stocks and holding them longer in an environment like this just gets more and more expensive.
It does. And I tell you, like I said, we've really prided ourselves for a long time, of containing losses. And I think it's, once in a while you have to be reminded.
Yep.
And so I'll go over one of those in just a minute. But I have a couple of stocks to go over here. I wasn't able to be in for the first part of your show. You might have covered a few of these, but we saw what happened to Netflix. Here's a great example, right?
Mm-hmm.
Cult stock, been just a huge leader in that whole FANG section. And you take a look at that stock. They reported earnings. They popped huge after market. I think they got to 390 plus. And then, the next day, you can see, what happened to the stock, even though it reported okay numbers. In the last three trading days, it's 15% off of its high. I think this is like a prime example of, in the past, if the market had been in a good mood, I think if the market had been in a good mood, volatility not the where it is, you could be potentially seeing this stock try to get to a new all-time high.
Yeah, I would agree. I think, we probably were clued in a little bit when you get a gap up on strong earnings and you can't clear the prior high. That's usually a pretty good sign that you're not going through. And we print that black candle off of an uptrend on very heavy volume. That too is a reversing candle. So some of this, and especially in a highly volatile market, I think you could maybe guess that some of this was going to happen. I'm pretty sure that I spoke about Netflix recently. I thought it would go back down to this 320 area, and we did get down as low as 320 on today's low. I'm not sure the selling is over on Netflix.
Not either.
310 is still going to be a pretty big support level if we go back down.
Yeah, I agree. And then here's my here's sort of a lesson. I want to pull up a stock, CLDR.
Okay.
All right, you take a look at this stock. This is a stock that we added to our watch list, meaning a trade alert, on October 11th at $15.40.
Okay.
We had a stop of a close below 15 in the quarter, so very okay, very manageable.
Mm-hmm.
The stock did not cooperate, and on the 18th, I thought it was really oversold, and on October 18th, we changed the stop to a close below 1465, okay?
Mm-hmm.
And then you can see what happened Friday.
Yep.
I mean, you can just see what happened, and this is really important, because this is highly unusual for us. We tried to adjust, to a market where I thought we could catch a bottom here, and instead we ended up with a loss that was much greater than we would have had we stuck with our original one. We did it a couple times over the past couple of weeks, thinking, well, maybe this will be a chance for reversal. But in fact, it did not work in our favor. And you get a couple of these, where you're down, instead of being down 2 or 3%, 8 to 10%, it can eat away at your other gains quickly.
Mm-hmm. Yeah, I think any of these stocks, when you're below the moving averages, and obviously volume's picking up, to me, this is kind of like trying to catch a refrigerator dropped out
Yep.
the door of a building. I mean, it's just going to smash you. I don't know. When you see a stock like this under pressure, it's just hard to really pick what day is going to be the big reversal, and whether or not even the gains when it reverses is, if they're going to stick.
Yes.
But when I look at the chart, I mean, you can come back here and maybe see off of this downtrend, you do have a piercing candle, which is a reversing candle, and that at least temporarily halted the downtrend and moved back. But when you come down here and you look, I mean, there were a couple of candles, this one in particular on the 15th of October with maybe a little bit of a hammer, but that low never took out the prior low, so you never got any new sellers coming in.
Mm-hmm.
It's hard to try to pick a bottom in stocks when they are free falling like this. And it's one reason why I'm sitting completely in cash right now. I'm not trading anything.
Yeah.
I don't trust the market, and I'm just going to wait and let things settle down.
What's really interesting about this one, if you take a look at when they reported earnings, look at that massive volume bar and the gap up.
Mm-hmm.
Look tremendous. And then it pulls back, and you get back to the 50-day and say, this might not be a bad time to take a little shot. And then sort of consolidates, and then the floor falls out. And this, to me, for anybody listening, to me, this is like just a prime example of technical analysis. Can work well, but every once in a while, Tom, all bets are off.
Yeah, well, when you get a highly volatile market, I'll just say it again, I don't believe that technical analysis works very well. I mean, the market is trading more on sentiment and emotion than it is based on technicals and support levels and things like that. I mean, this is a great example. I mean, here's a stock, comes out with earnings, gaps up. I believe they also announced they were merging with someone. I just kind of remember Cloudera maybe a week or 10 days ago announcing they were merging with someone. But anyway, the stock comes down. You can see it hits the 20-day moving average, it fails. It hits gap support, it fails. It hits the 50-day moving average, it fails. It comes down here to the bottom of this gap support on Friday, and it failed on a basis. So that's what I'm referring to when I say technical analysis just kind of is thrown out the window. When many of these small, mid-sized companies have really taken it on the chin over the past 5-6 weeks. And with a high volatile market, it is really difficult to try and catch a bottom.
Yeah, a couple other real quick here. ONDK on deck.
Okay.
We were on deck for that one. And this is a case of where we were clever and took our profits and an opportunity, got involved in this one, on September 24th at $7.12, had a price target of $8.20. It got to almost $7.80 on the 1st of October, and looked to me like, that was going to be a level that we're up 10% in a couple days. And in this market, I wrote to everybody, we got to take this gain. So we jumped out, and then you can see, what happened. Just another case of really hard to hold gains on how you have to take these profits quickly when they come along.
Yeah, and I think too, this one's a perfect example of what I was talking about earlier in the show. When you get the kind of market that we've been in, and these small caps in particular really struggled since September. But here the stock moves below the 20-day moving average, and look at all the attempts to get through the 20-day with failures. We finally, a week ago, did get through the 20, but we even gave that up. Looks like a false breakout at this point. So good gap support, though, down close to that 675 level. We'll see if that holds.
All right, so the last, I have a couple I want to talk about upcoming earnings, but just one that we have active now, which shows, I think, a stock that's holding up quite well, is SCVL. And this is one we issued an alert on, trade alert on the 10th of October, $37.33 with a price target of $41.50. I'm very pleased with the way this thing is held up relative to the market. You don't see a lot of stocks that are above all key technical levels, and our target's 41 and change. I think we have a shot at getting there.
Yeah, I think Erin would agree with you on this one because this was her setup from last Monday.
Okay.
Yeah, this is, I think this is a nice looking chart. I said last week, I thought it was a pretty good one. It's been holding up pretty well. This is what I expect most stocks to do when they gap up with earnings like this one did back in August. I mean, it was obviously a very strong report. It went all the way down. You can see this gap support and also the breakout, which was just below $36. It had that plus gap support around 37, came down to right about this 36 area, started to turn back up again. I would expect it to make another run for 44, especially in a good market. Now, market, just keep your stops in play. I think if it went back down below Friday's close, I'd be a little nervous.
All right, and I'll end with a few. I just want to mention a couple stocks, and maybe you don't need to pull up every one of these, but I noticed this week, we've got Amazon, Boeing, Caterpillar, Google. Take a look at Caterpillar. Okay, and it's just look. You take a look at this stock when it challenged. It challenged its high there, didn't quite get there. A couple of weeks back, it fell off a cliff. They got earnings coming up. And, when you take a look at this stock, you got to be thinking, wow, expectations can't be great.
Yeah, I'm not a big fan here of what's going on. Is it support, but I still wouldn't hold into an earnings report. But this is why I like to trade. I mean, here's a perfect example. I mean, we got a couple of tops here near 157.50. And when you go back, you can see historically that's been a very difficult area to get through. And I especially when I see something like this candle back on May 21st, where you gap up, you trade intraday above these prior highs and then come back down and print a shooting star candle, which is bearish. That to me is a signal it's time to take profits and move to the sideline. But yeah, just trying to close back up above 157.50 was difficult. And I would even throw a couple of others out here. I mean, I could just throw out like the XLE. Look at the XLE, which is, the for energy, trying to break out above that prior high, failed. Look at what's going on now. Now it's down here threatening a breakdown. I mean, you do have to respect price support and resistance, no doubt.
Yeah, and another one, of course, that why we don't hold stocks in. It's great if you hold a stock into earnings and it pops on you, but if you're holding an IBM, for example, into earnings that just got massacred, there's nowhere to hide on that one.
Yeah, and then the problem is you get stuck in it. So it goes down, it's at 135, and you're like, well, if it gets back $5 or $6, I'll get out. And then you see what happens; it just keeps going lower and lower. Where is the bottom? I don't know where the bottom is. PPO is accelerating to the downside. Volume's been heavy. Everyone's trying to, head for the exits at the same time. So very difficult to try to say. I mean, maybe we get back up and test that gap, the bottom of that gap resistance at some point down the road. But yeah, it's risky holding into earnings and then especially holding stocks that break down.
Exactly. Now, listen, I'm going to get out of here. I want to mention one thing because it's involving you.
Yes.
And, that'll be this afternoon. We're having one of our 4 quarterly earnings webinars. I'm calling it Preparing for Year End. It's going to be this afternoon, 4:30. This is an event that anybody listening to can come in for free. If you go to our website, earningsbeats.com, and click on the About Us section, you'll see there it says today's webinar. And right up there, today's webinar. Yeah. Just click on that, and anybody who wants to join in on this thing, it's going to be excellent. you're going to be talking about some, stocks that could be ready to go one way or another with earnings involved. What sectors might, rise up or be weak into year end. And then importantly, our strong stock chart list basically includes companies that have reported earnings. They end up on our strong chart list. These are companies that theoretically, Tom, should hold up, well, no matter the market environment. So we're going to be covering all this stuff. It's going to be awesome. We're going to have a great, great number of people coming in. So anybody wants to jump in on that, come on in.
And I plan to just talk a little bit about, some of the tips and tricks and some hints, helpful hints, hopefully, of some things that you can look for.
Yeah.
Start to feel a little bit better about the market having put in a bottom and being a little less risky to trade. But it should be a lot of, it should be very interesting. I would say a lot of fun, but the last few weeks haven't been a lot of fun.
No, not at all.
But it should be very educational, no doubt.
All right. So listen, I'll be seeing you later. Thanks for having me in, and I'll see you later.
All right. Sounds good. Thanks for stopping by, John. Okay. There's a roundup right there of the stocks that John just covered. And I'll tell you, many of those stocks on the list after strong earnings came out, Netflix, Cloudera, On Deck, Shoe Carnival, all of them, after they gapped up with those earnings, it has been straight down for many of them. So tough environment, no doubt about it. You think that you got a good stock, they come out with great earnings and the market doesn't care. And unfortunately, when you get into a highly volatile market like we are right now, bad news is bad news and good news is bad news as well. But anyhow. All right, it is time for the 10 in 10. What do you have, Erin?
All right, let's get started. It was an interesting request setup today. So here's the RRG. But I always am interested in seeing the sectors that are requested. And look at this, consumer discretionary is like just tearing it up as far as requests. And the majority are retailers. I don't know what you think about that, Tom, but wow, lots of interest in retailers today. So we'll look at least one, maybe two. But let's go ahead and get started with Burlington.
All right, Burlington. Well, I would say that Burlington has held up pretty well. Another company that's had a couple of really solid reports over the past 6 months. But the market from beginning of September, which is when we saw a lot of the small caps start to falter, from there through the lows that we saw over the past couple of weeks, you can see the stock fell from 175 down below 150. So the stock was down probably about, 16, 17% in about 5 or 6 weeks. And so even the stocks that are reporting really strong results still kind of being thrown out. Maybe it's a baby with the bathwater kind of mentality. I would just be careful, as I would any stock. I do like the fact that we got back through the 20-day moving average last week. We fell back a little bit below it. Now we're back above it. It's starting to give more signs of more of a directionless kind of a market, more consolidation than anything else. And that's what you start to see when the moving averages don't hold as support and resistance. We saw this back at the end of September, went back down to new lows, came back up above the 20-day, back down below it. Now we're back above it. It's just starting to show more of those short-term consolidation tendencies, not necessarily trending tendency. So that makes me think that we're in a trading range here. So I would probably be looking at the high, that initial pop that we saw at the end of September, back up around 165, 165 and a half. I think maybe if the market is okay here and settles down, we could get a run up into that area. But if the market sells off again and we start seeing that impulsive selling, I would not be surprised to see the stock all the way back down into the 145, 147 area. So I don't think anything really is immune. Utilities, consumer staples, those types of stocks do better on a relative basis, but they don't generally do well on an absolute basis. When the market sells off, usually everything goes down with it. So we'll have to keep that in mind. But at least for now, I would say Burlington's more just sideways consolidation.
All right. And the most popular request in the chat room is Mr. Softy, Microsoft.
All right. Microsoft is really just struggling with the overall software group. I mean, you've got one of the better software companies. So if I wanted to hold a software company and feel relatively good about it over the next couple of months, I would say Microsoft be really high on my list. But I don't have to do that, so I'm going to watch from the sidelines. But I do think there are a couple areas to keep in mind and watch. There was a gap up back in July. This was with earnings. Once we gapped up with that big volume, notice we have not gone below 104. I think that's kind of a line in the sand for me on Microsoft. If the market were to really start to sell off, Microsoft loses 104, I think I'd keep a stop there. In the meantime, you've got the prior high up around 116, and we are trading right in the middle of this range, right at 110. So I don't see that there's anything really to do at this point with Microsoft. From a short-term trading perspective, if I had to do anything, I'd probably short it because I think the overall market goes lower in the near term, and I can keep my stop fairly tight. If I got back up above, say, 111.5, 112, I would be out of it. So I can keep my stop maybe 1.5 to 2%, but I would be looking maybe for a return visit down around that 104 area.
All right. Let's see. Next one I'm going to give you is one of those consumer discretionary apparel retailers, TJX.
Yeah, I pulled up TJX in my setups. I like the stock. So I would just, I'm not going to rehash it here for too long, but I do think you've got pretty good support around 107. And if you do manage to go below that level, if things get weak, then I think you've got the tail on the earnings report down about 105. And that would be kind of a line in the sand there. If you wanted to give it down the bottom of gap support, but then I think you're getting into that thing where you're just going to continue to find reasons and excuses to hold on to a stock. I think I'd like to see it hold 107. If it doesn't, I'd be on the sidelines given the overall market.
All right. Interest in the marijuana stocks today. Let's go ahead and pick Canopy Growth, CGC.
Yeah, some of these are starting to break down, I've noticed. And, it usually doesn't end well when everyone's speculating and sending these stocks. This was a stock that was down at $24 back in August. And less than 2 months later, it was at 60. That's 150% move in less than 2 months. That generally is not going to continue. So we kept coming down here and hitting some key support areas. I think on CGC, the one that I would watch closely would be something like the 40.5 area, that low that we saw in mid-September. That's where I'd want to see this hold. If it doesn't, then I think your next level is going to be the breakout area above the June top, which would be all the way down around 36. So those are the next two areas that I would watch. But check out the volume coming in here on this down move. It looks like a lot of distribution taking place to me.
All right. This one I know we haven't looked at in a long time, but AMC Networks, AMCX, that's now in the comm services sector.
Yeah, this is one that if I was looking at for my Monday setups, I might have considered shorting. This is, again, similar to just not a good setup. We've talked many times about these stocks when they break down, that the initial move back to the upside, trying to get through the 20-day moving average, is generally the problem. And so as it gets closer to that 20-day, if I had to trade the stock, I would actually be trading it on the short side. We had a big breakdown with heavy volume. Now we're rising back on lighter volume. I would expect we're probably going to fail right at about $61, but that would be my short-term take on it. Longer term, it might be fine, but short-term, I'm just a little bearish the market right now.
All righty. Let's look at Gaia, GAIA.
What was it? GAIA?
GAIA.
Starting to try to turn around. First of all, it's light volume stock, so I would not trade it. It doesn't trade enough shares for me. I mean, it's been downtrending. It's trying to turn back up. I'd be more excited if maybe we could take out the high from last week and the PPO turns positive. So I think we're starting to maybe put in a bottom. I mean, we had lower lows, higher PPO. Now we're starting to turn. PPO's trying cross center line. Things are definitely improving, but just keep in mind that a downtrend is a series of lower lows, lower highs, and we clearly have that in place still. Probably not until we break out above 18 would that change. But I might be willing to take a shot if we got through 1675 and saw volume picking up. So that's what I'd look for initially.
All right. Let's look at consumer staple MKC, McCormick.
Yeah, it's in a good space. I I think more and more money is rotating over into the consumer staples area, and this is clearly one of the leaders. So I think that this chart looks a little spicy, right? There you go, Erin, right? You see what I did there?
Yes, I did.
I like the breakout here. I mean, clearly when you're looking at what the market's been doing, I mean, how could you not like this stock on a relative performance? And it is in the consumer staples area. So if the market continues to sell off, money does tend to rotate more toward consumer staples. So I like the stock. It is actually overbought. Not too many stocks can we say that about right now, but it's overbought. Maybe a pullback to 136.5, 137 area would become more interesting if the market sells off. But I think MKC looks good. It's one of the better looking stocks out there, in my opinion.
All right. This was the only utility requested. Portland General Electric, and it's POR.
All right. Very nice pattern. I see an inverse head and shoulder here, threatening a possible breakout. So if we, whoop, the heck did I just do? Can you still see? Are you seeing my mountains?
Oh, hang on.
I don't know what the heck just happened to my screen.
Yeah, I'm seeing your mountains.
All right.
You want me to grab it and then, yeah, let's do this.
Let's grab it. I'm not sure what the heck just happened.
There we go. And go ahead.
Right.
Otherwise, I will just pull it up for you.
For now, just pull it up if I can get it back here.
Yeah, no problem.
I have no idea what just happened there.
Let me get you your chart style.
It said Safari just quit unexpectedly. It was very unexpected from my end. Not for that at all. Actually, I do have my charts back up. I'll go ahead and take it. What was that next stock?
Portland General, POR.
Okay. Sorry about that. Okay, Portland General. So let's take a look at this one. Yeah, what I was looking at here is if we, and I don't know, I'm kind of OCD when it comes to this stuff, but I like the same kind of colors and all. But when I have patterns, there's a neckline. Not exactly up there, though. All right, so there's the neckline. Here was the top. So off of an uptrend, you put in the left shoulder, you move back up left side of the neckline, you put in a lower low, which is the head, come back up, put in a right side of the neckline to equal. Because normally if you're trending lower, you're not going to come back up here and set the other side of the neckline. Normally what you would expect in a downtrend is lower low and a lower high. So when you go all the way back up here to this neckline area, that's generally a sign that you are consolidating and that there's some sort of continuation pattern that is building. Look at that false breakout, tail up above the neckline, come back down. We go back down one more time. I think put in the right shoulder, which does not go below this head, which is important. And now here we are. We got another false breakout on Friday, but I would be looking for a breakout here in Portland General Electric, and that would measure up about another $2.50. So if we do get that breakout, I'd be looking for a target 49.5.
Okay. Let's see. Next one is an ETF, a bond ETF. It's SHY, SHY.
All right. I'm not a big fan of the bonds. This is a shorter term, though, 1 to 3 year Treasury bond. I mean, it does continue to, for over the last 6 months, continue to move a little bit in the, a little bit higher. I'm just a little concerned that that's probably not going to continue. So I would say at this point, I'd be watching the resistance level up at about 83.09 and to the downside, about 82.86. Keep in mind, the prices, as you can see on this chart, do not change very much. So if you're trading this, you're literally looking for pennies. You're not looking for a 5 or 10% move. You might be looking a long, long time for that. So this isn't the kind of thing that I would personally trade, but I would maybe watch these levels if you're trading it.
Okay. And the last one, GoPro, GPro.
All right, GPRO. All right. Well, it held on to support, and it's sideways consolidating. This is one that this is just a 6-month chart, but this is a company that's been beaten up so badly over the past couple of years. It seems to be trying to maybe right the ship here. I would watch these two key levels. This was a major pullback back in July. Stock went from 7 down to almost 560. So that's about a 20% pullback. then we moved higher, and so far we've been holding these lows. So that's a key low to me from a longer term perspective. The recent highs have been up around 740, so that's the area of resistance, and currently we're almost in the middle of the trading range at 660. So I think I like the fact that it's holding up better than the overall market. The fact that we're not downtrending is a good thing, but we're in the middle of a range. I don't see a trade here, so I would just pass on it for now.
All right, that completes the 10 and 10. And here are the symbols that we just did. Those will be up, those charts that you just saw with the annotations will be up in the Market Watchers live chart list. And to find that, just go to the blogs tab, click on the Market Watchers live blog, and you'll find the link right there at the top. Right now, it is time for our final market update. Let's see what has been going on while we have been enjoying ourselves talking about all these stocks. Let's see what's happening with the general market. All right. Well, as you can see, markets are lower right now, and we are seeing the declining trend that we had on Friday continuing right now on the S&P 500 and on the Dow. NASDAQ, however, is in positive territory right now. It is currently up about 0.4%, and the OEX is lower as well. You can see also continuing a declining trend from Friday. S&P 400 and the Russell 2000, you can actually see, I mean, we're getting the downtrend still continuing for the S&P 400, but in both cases, you can see we've gotten two lows today. Maybe we're finally seeing a bottom on the mid caps and the small caps. The TSX is lower right now, down over 60 points. Treasury yields, we have reading 3.19%. UUP, big gap up. Started to trend higher. Looks like we're pulling back just a little bit. You can see we have some support right here from back on Thursday. We'll have to see if that can hold. GLD, big gap down, and is trying to set this rounded bottom and start to head back up. We'll see if that gap turns out to be, that resistance turns out to be too difficult for GLD to get through, but it is currently down 37 cents, reading 115.64. TLT is pretty much unchanged right now. It has been chopping around the last couple days. USO is lower on the day. It was quite a bit lower on the open, and we have made back some of those losses that we saw earlier, but we're still down about 0.5% on USO, currently reading 14.64. And that's all I have for the final market update. I'm going to pass back to you, Tom.
All right. I just wanted to show a chart that I had in my blog this morning. This is the S&P 500 going back the last 13 years. And if you connect the major lows off of the bottom, we rallied, and all these pullbacks, if you connect these going across, you can see right now we currently intersect with about 2,600 on the S&P. And the recent low that we saw back in January, February timeframe was down about that 2,500. So from a pure price perspective, I still believe we're in an uptrend. And so that's why I'm not thinking bear market. The other thing, and this is a question that comes up a lot, well, what about the XLY, XLP ratio dropping so much over the past few weeks? And I would say, well, yeah, it's dropping. The market's dropping. If you look back at some of the other big drops throughout this entire bull market, they're all shaded. Check out what happened during these pullbacks. I mean, that's typical. This is what you see when the market pulls back. Money rotates away from aggressive areas, and it moves into more defensive areas like the XLP. Where I have a problem, and what I really try to watch the market for major directional changes, is when the S&P 500 is actually moving to new highs, and the XLY, XLP are starting to free fall. Because that's an indication that the leadership that is driving the market to the upside is the wrong kind of leadership. And that usually precedes some pretty nasty action in the market. Dating back to 2008, 2009, you can see the opposite was true. We had the S&P going to new lows in 2009, but the ratio, actually money began rotating back towards aggressive stocks when we were making our final low. So what I would be most concerned about, what I'm going to be paying attention to, if I'm right and we are simply correcting right now, we're still in the bull market, I think eventually what will happen is the S&P 500 will go back up either to test the old highs, maybe move to new highs. And if you don't see this ratio going up with it, instead, you see it continuing to move lower, that would be the warning sign that I would be looking for. So I'm not ready to write this bull market off just yet. And I know you've got a DecisionPoint update. So Erin, take it away and give us the latest.
All right. It is time for the DecisionPoint report. All right, DecisionPoint report dated Monday, October 22nd. What is going on in the markets? What can we expect coming up this week? I'm going to go ahead and go over the weekly and daily charts for the large caps, mid, small caps, the big four. And then I will also be covering our DecisionPoint indicators. I'm going to start off right now with the DecisionPoint scoreboards. Important to look at. These are the signal changes that came in last week. And actually, I do need to date this properly. It should be dated 10/19, but I logged it in today. The Dow ended up with a negative crossover on the PMO on the weekly chart. So that's why we have a PMO sell signal that came in. That is our most recent signal change, and that is on the Dow. It joins all of the other large caps that we do have already on PMO sell signals on the weekly chart. So you can see we're really getting a lot of deterioration in that short and intermediate term. Of course, we started by seeing that deterioration, looking at the dates. We saw that start in the beginning of October, and in some cases a little bit earlier. As you can see with the S&P 500 and 100, we actually got those sell signals on the PMO back in September. So pretty interesting fact there. And then last week, we started to see these intermediate term trend model signals start to fall as well. NASDAQ had lost it's quite a bit earlier, but now we're seeing the S&P 500 and 100 both came in last week with intermediate term trend model neutral signals, and I'll show you how you get one of those. All right, so let's start with the Dow. Like I said, I'm going to look at the daily and the weekly charts and give you an idea of what I am seeing currently. Right now, what's important is, if you noticed on the previous chart, we did not have an intermediate term trend model neutral signal yet for the Dow, but it is going to come in today. There is no way that it'll avoid it at this point because price is well below both the 20 and 50-day EMAs. When we get a negative crossover of the 20 and 50, that will become either a neutral or a sell signal. In the case of the Dow, it will be a neutral signal, mainly because this crossover is coming not only above the 200-day EMA, which is the rule between neutral and sell. When the crossover occurs above the 200, it's neutral. But notice also we have a very large margin between the 50 and the 200. So while we're seeing these intermediate term signals switching into neutrals and and sells in terms of the PMO, we're getting that deterioration, but right now the long term doesn't look that bad. And you'll see on a lot of the large cap index charts where we do have a rising trend that is still intact. And I did not draw it in here, but you're going to see it on the others. There's that PMO sell signal that just came in. On the NASDAQ, right now we do have that PMO sell signal that you can see that came in. We're also looking at that intermediate term trend model neutral that came in like some time ago with that PMO sell signal. Right now, I have identified a bunch of areas of support and resistance, but really the two most important are at that 7,400 level right up here. And of course, that support level at the low that we got mid-October on this correction for the NASDAQ. I was really concerned when I saw that drop below the 200-day EMA, but we did end up seeing price get right back above it. So that left me a little less concerned. But tech has certainly been suffering more so than some of the other areas. But long term, this is what you're going to see on a lot of these weekly. And if you go to a monthly chart, while we do have PMOs that are on sell signals, which I don't like, obviously, to see, most of these were still in the longer term. We still are holding on to rising trend channels or even just rising bottoms trend lines. So it's just something to consider. If we start to lose those support levels on those rising bottoms trend lines that are forming the bottom of these rising trend channels, that's when I'm going to start to get especially concerned. But right now, I think being neutral on the market, being in cash, like Tom has also been talking about, I think that is the safe place to be right now. If you want to be a little more aggressive, you could short, because I do see in the short term, we have all of these sell and neutral signals. So it's not like it would be a bad environment to short at this point, but it would still be considered, in my mind, a little bit aggressive. So here is the S&P 100, similar situation where we lost the 200-day EMA, but fortunately got it right back. The PMO is, and on all of these large caps, pretty much they're in oversold territory, these PMOs, but they haven't reached, super oversold area, oversold extremes. We're not quite there. We can still see the PMO and momentum continue to shift lower. And right now, as far as the S&P 100 and on the other large caps, the PMOs are still in decline, and we're really not seeing much in the way of deceleration. S&P 100, there's your PMO sell signal. It's not new. It actually came in last week, not last Friday, but the Friday before. As you can see, it is a little bit older, but not much. And again, holding these rising bottoms trend lines. In the case of the OEX, we did lose this rising trend channel that was more intermediate term to shorter term. We lost that, but we're still maintaining the long-term rising bottoms trend line. S&P 500, the one everybody is waiting for. Currently, we are trading below that 200-day EMA. And if you look in the thumbnail, we did close below it twice. This is not a good way to start the week, in my opinion. I would like to see the close be above the 200-day EMA. But really, the important thing to be watching right now for the S&P 500, I would say in the shorter term, is rising bottoms trendline support. That's a lot of times where you're going to see, we want to see this rising trend maintained. And right now, it's heading back down. If we finish below that 200-day EMA, I would certainly look for lower prices to at least test the rising bottoms trend line here. But we don't want to lose it because that would mean we are losing some, important short to intermediate term, that rising trend. We don't want to lose the rising trend. And for the S&P 500 on the weekly chart, and there you go, this is an even longer term trend. So here's where I had drawn the shorter term rising bottoms trend line, but that even goes all the way back to 2016 when we started to recover from that first correction that opened up the year. All right, let's look at the mid and small caps. Certainly suffering more than the large caps. The PMO sell signals came in very early on the S&P 400. The intermediate term trend model neutral signal came in later, but it is indicative of the weakness that we are seeing right now. Now, we held some support here. I did just put it right at that May low, which is where that previous corrective move finished. But we still have a lot of support that we can move down through on our way lower. And I think we are due to move lower. The good news is when I look at this chart, typically the PMO will oscillate between +2 and -2. And right now we are seeing the oscillations continuing between that. But right now, look at the PMO. It is reading at 1.83, a negative 1.83. So it is now hitting the oversold extremes as far as the S&P 400. Looking at its longer term rising bottoms trend, the trend channel, it has been broken. I need to go in here and recheck, but I can tell you just looking right now that we have broken down below some important rising bottom support This is what I did not want to see on the large caps. We've already seen it now in the mid caps. Look for support at that 2017 high back here. You can see at the top in the third quarter, but it also lines up with where the correction ended last time earlier in the year. That's the level that I would look for a possible reversal. But, you know, when you're looking at a sell signal and a PMO heading, I mean, seriously, straight down, about as straight down, almost vertical as it can be. So there is still a lot of weakness out there. And the S&P 400 doesn't seem to have started to gain strength yet. I look at IWM, and you know, we had the drop. It recovered, and now we're heading back down to test that low, short-term low we had earlier. This could end up forming a double bottom. Now, of course, you can't even call out a pattern until it executes, but I'm just going to call out right now that it looks like we might get a double bottom coming in on the small caps. The PMO is slowing down in extremely oversold territory. So I think that it is in that space where it could start to look for that reversal. You can see we did lose the rising bottoms trend line on the Russell 2000 as well. And we have that sell signal. Not a good thing to see. All right. Let's go ahead, and we're looking at now our indicators. I'm going to move kind of quick through these. The problem we did get, you can see on that move to the upside, we did see these short-term indicators coming back up. What concerns me is that on Friday we topped, looking at the fact that we are down, 0.4%, at least when I had printed up this chart. I would expect to see them move back down below the zero line. When you get a top below the zero line, that's what we had last time, right before the major drop in the correction that we had this last time. So you could see it even in the thumbnail. It came in back up here. So we had some warning when we got those tops at the zero line or below. And I'm afraid we're setting up for the same thing. Could mean another dip down in the shorter term. Intermediate term is looking every bit as ugly. We have tops below signal lines right now, but we are in oversold territory, which is positive. But we have, like I said, just turned down below the signal line. I don't expect that this is the turnaround point just yet. All right, UUP, the dollar. It really is moving sideways at this point, and it is getting toward the top of that channel. I'm still looking for it to break out at this point, mainly because of the look of the PMO. It really is set up nicely. We had that bull kiss. It's heading back up. Scooter is in the hot zone at this point. So I am bullish on the dollar. We might see it struggle just a little bit at overhead resistance before it breaks out, but I am looking for a breakout on the dollar. And you can see it held this 25-25 support here on the weekly chart. And look at the PMO. It has now also bottomed above its signal line, like on the daily chart, and is headed higher. We actually do have a higher reading than the last top on that weekly PMO. I think that is also positive. All righty, gold, GLD. It looks like it's forming a flag to me. I know GLD itself is down a little bit. This is actually the gold chart. What I really want to point out is a possible bull flag, an intermediate term trend model buy signal that is lining up, as well as the fact that it has decoupled from the dollar in the short term. It's actually got a positive correlation now, if you want to call it correlated at all. 0.18 isn't very much, but it is on the positive side of the correlation factor, meaning that even though these usually travel exactly opposite each other, as you can see with these -1 or close to -1 readings on correlation, but now we're in positive. You know, as soon as we started to rise and get toward that zero line, that meant that it wasn't correlated at all. So what does this tell us? That even though I am bullish on the dollar, I can also be bullish on gold at the same time. I look at this as a flag. I like that buy signal coming in. I would look for the breakout above the 1240 area, especially if we continue to see such weakness in the market. It usually is a safe haven. And look at the nice scoop on the PMO right now. Very much like that. All right, USO. We are looking at lower prices. I suspect we're going to go down even lower and test rising bottoms support here. I suspect we're going to hold on to that and start heading back up. There certainly is room for it to move much further down to that 1325 area. But I think this is a pretty good pullback. I think it's about time for it to make that reversal. But I'm not going to call it right now. We've got the sell signal and the PMO is still moving downward, but I think we're getting closer. And here you go with USO. It's in a rising trend channel and it's sitting right at the bottom of it. That's why I'm looking for that reversal to the upside. But we do see the PMO has been flat. It is starting to move lower as prices have been moving higher. So we're certainly vulnerable to that downside move. Finally, finish off TLT. We're heading back down. We made that rally. Couldn't get back above really the 115 level, which you can see we had these bottoms previously. So it is pretty strong resistance. The PMO is trying to give me a buy signal here. But the more I see this decline on right after that rally, I'm not feeling too good about TLT still. And I see the execution of a giant head and shoulders on the weekly chart. Carl is looking at the same. We've got the PMO sell signal at the 0 line. I would be expecting bond prices to continue lower. All right, and that concludes the DP weekly report. Here's our summary. You can take a peek at the large caps. All of these charts, you'll find them in the DecisionPoint live chart list, and the link is at the top of the DecisionPoint blog. Here's just a summary of what I'm looking at. I still see weakness. We've got rising trends that are still holding. We didn't get those rising trends to hold on the 400 and 600, but they are getting close to some important support. Both, I would say, short and intermediate term indicators, not good. Don't like the looks of them. They're bearish. Dollar, I'm bullish. Gold, I'm bullish because of that correlation. I think I can do both. And as far as oil goes, I think we're going to still see a little bit more pullback, but it needs to hold that rising bottoms, that rising trend channel on the weekly chart. So I'll have to see if it manages. And like I said, bonds pretty much bearish, that head and shoulders. That concludes it. We are done with the DecisionPoint report, and we're getting ready to finish up the show.
Yeah, I do want to just kind of share with everyone really quickly that there was another Chart Watchers article out this weekend. If you're not a member, you can go into the blogs page, blog articles, and on the right-hand side, there's a couple of different ways you can sign up. This is one of the ways. Just type in your email address and sign up. The reason I wanted to mention it is there was a special Chart Watchers done over the weekend where all of us authors did talk about the sectors. And in particular, you may want to go back and read Grayson Rose's article about the sector shuffle that took place in September. If you haven't read that, you definitely want to check that out. All right, we got interesting stuff coming up later this week. As you can see on the screen there, looking forward to it. Erin, great job with the DecisionPoint, and we're going to be back here tomorrow. So thanks to everybody for tuning in. Always glad to have you with us. Please remember to complete the survey as you exit. We do love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and hopefully we'll see you back here tomorrow. Happy trading.